Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Due to investors taking profits and the impact of statements by Cleveland Federal Reserve Bank President Loretta Mester, the U.S. dollar index is currently on a downward trend at 104.20. Mester warned that taking too many steps in tightening monetary policy could pose risks and potentially impact the labor market. The U.S. dollar, measured by the dollar index, rose to 104.60 at the start of the week, reaching its highest level since mid-November. This rise was attributed to the strength of the January ISM Services PMI and the market's abandonment of hopes for a rate cut in March, thus giving the dollar index a favorable boost. After a quiet European session around $2,020 on Tuesday, gold prices turned upward, reaching above $2,039. Following a significant rise on Monday, the benchmark 10-year U.S. Treasury yield fell by more than 0.1% for the day, contributing to the rise in gold prices. In the Asian session on Tuesday, gold maintained a modest rebound pattern around $2,025, having touched a weekly low of $2,015 on Monday. The dollar and U.S. Treasury yields retreated from multi-month highs, giving gold sellers a breather. A strong U.S. non-farm payroll report combined with hawkish remarks from Jerome Powell lowered expectations for aggressive Fed rate cuts this year, leading to a decline in gold prices. Despite Fed officials opposing expectations for a rate cut, WTI crude oil in the U.S. rose by about 0.87% for the day as the dollar softened. Additionally, a report from the U.S. Department of Energy lowering oil production forecasts was a factor driving oil prices up, after having touched a low of $72.41. WTI crude oil saw a modest rebound during the Asian session on Tuesday. Concerns over tensions in the Middle East and the ongoing Russian invasion of Ukraine potentially constraining global supply may limit the downside for WTI prices. Stronger than expected U.S. PMI and NFP data could persuade the Fed to maintain higher benchmark rates for a longer duration.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news